Happy Friday, traders. It's 8:01 a.m. Chicago time on the 15th of May, 2020. We're at episode number 1756. Thanks for joining us. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As you probably noticed, if you're on the YouTube version of this, as opposed to Periscope, people are putting in their city, state, and country. That was a request that I typed in. This is one of those Fridays. We'd love to hear where you're coming in from. It helps. It's just for fun. It helps us look around and see the diversity and variety of listeners and watchers. I know about half of the viewers of the Trader Bite every morning do it not live, but at some point later in the session. If you wish, you can just shoot me your um, your city, state, and country to on Twitter. You can go to twitter.com/futurestrader71 and then just add the hashtag TraderBite, TraderBite, and that way everybody can see where everybody's from. And hopefully on Twitter you can connect. Here you can't really find out or connect with other people, and hopefully uh, if we're successful doing this, we're bringing people together, which has been the driving force behind everything I've done for the last 12 years since I came online out of my prop shop and online. Anyway, let's get back to business. This morning, the overall market sentiment is really mixed. It's lower on the indices. We're opening below yesterday's close across all the futures indices in the U.S. The DAX and the Euro stocks are holding up pretty well, but there's been a pullback here in the U.S. with the Nasdaq being weakest. The Nasdaq's at 8937 and a half, down 142 points or 1.56%. The S&P's down 31 points, trading at 2816. The S&P closed around 2846 yesterday. The leader today is crude. Crude has broken out of its balance to the upside. It's trading at 28.73 in the July contract. July, I did not get the alert for roll, and I should have known that. Front month is July now. 28.72 up 84 cents or 3.01%. 3.01%. So that's where we stand there. Gold is up around 1753, up $12.30 or 0.71%. So allocation is more to safety than risk, but really it's a mixed bag coming into Friday. Busy week this week after the pullback. We've taken back a lot of that pullback though yesterday in the S&P, and we're holding steady. The overnight session was actually pushing higher. The S&P again closed around 2846 and pushed to 63 and a half, 2863 and a half as a result of comments by POTUS. Trump saying that he doesn't want to talk to China's Xi and is considering cutting ties. The market does not like that information. Crude's enjoying a pop higher as economies open up. China's demand for energy products is picking back up as manufacturing's getting back online. And so crude is enjoying a push higher, but this comment from Trump caused an abrupt drop earlier today, earlier in the session. That's what we're coming into today. Um, in the calendar, as far as what's on the calendar, we did get some key figures this morning out of Germany. We got GDP came in slightly better than the negative expectation. Q on Q was expected at negative 2.4% contraction, recession, and by definition with a negative GDP, but the actual came in at negative 2.2 Q on Q, negative 2.3. Germany, of course, being the economic superpower of Europe, The Eurozone reported GDP as well, was expected at negative 3.8. Q on Q came in line. U.S. retail sales took an absolute pummeling this morning, and we had a quick splash down in the futures. U.S. retail sales month on month for April dropped 16.4%, 16.4% versus the expectation of 12%. Um, and going forward, we're looking at business inventories at 10 o'clock, expecting negative zero point 0.5, consensus negative zero point 0.2. Michigan consumer expectations, this could be a mover. The consensus here is 71.8, also coming out at 10 o'clock. Okay, pay attention to that 10 o'clock number. This is the prelim figure for consumer sentiment. Actually, the consumer sentiment numbers is expected at 68. Consensus is 68. Forecast 65. And that pretty much wraps up the day. We got Baker Hughes and a couple other things, but they're relatively minor. Sunday night for those who trade at 7:50 Eastern, 7:50 p.m. Eastern. Don't forget that Japan has its GDP release, which might move that market, and that's where we stand. Let's move on to our review segment. So yesterday, the primary idea was I was expecting a push into the 2808, 2810 area, and I was looking for it to turn over and go to 65. 65 was expected to be the base for the session, and I talked about this base, and I talked about, you might want to play back the context of yesterday's video. Some important things in there, in my opinion. Not not to sound braggish or whatever, but I talked about the very strong potential of extending lower for the continuation trade. As we had an impulse on this day, we had a continuation on this day, we had a minor continuation, and then it wasn't really done, and I expected it to drop to 65 and then come back into the range. Now, I was being conservative yesterday in that I expected it to base around 65, come back into the range, and kind of stick within the range. This is what actually happened yesterday. We'll try to look at it on the 4-tick Renko, but it may be noisy. I know this chart can get noisy here. But essentially, it is quite noisy, and I don't want to change the periodicity on it because it takes a while. Well, let me extend it out and move back. How about that? Let's move back. A pretty clean and clear open here. We opened right at the prior day's session. It opened right at the low of the prior session. The prior low is 27.86. It opened at 86 and a quarter, and we had this nice opening swing. So I classify this as an open auction in range, two-sided trading, and then we finally get an impulse down. I want to zoom into this just to kind of walk you through it. And I know some of you keep asking for these walkthroughs, but they take far too much time for a video that's supposed to take 15 minutes and is already constantly running over time. But we have this impulse down right here. We have this impulse down right here, and you could see that it crosses the red line. The rotation is relatively impulsive, and then we pull back to where on an impulse. This is the ideal situation. It pulls back to the mid, doesn't quite get to mid, it gets to VWAP, and then we get the continuation. And in this case, we're really just hoping for that 76 quarter low from 84, and that was the trade with a runner, and then the runner ends up working out to 65.50, the stock zone. And the area that I drew on this video here, that's this area right here as the expected basing area. It pushes right to it, and then we get this consolidation. We do get a little continuation below. It pushes to 60 and a quarter, and then forms this really nice, strong base, in my opinion, from which to fly up. And I commented in the head trader channel at Convergent Trading that that as long as it does not breach this 66 to 63 area, that could be a very, very strong base. And what it did is it pulled back to 66 and a quarter. 66 and a quarter. It had already tangled with the mid again, so that's worth a shot as a virgin test. And then it holds the 66, so we're holding the zipper down here. And as long as it holds that, I expect it to turn up. I talked about this in chat for those of you who are members of Convergent. And then we get this nice impulse up, like a nice relief push higher right here. And then we get the continuation and we breach the initial bounce to the upside, range extension up. So what are we looking for? If you recall the levels and the importance of the levels above yesterday that I discussed in what I think was a very, very um, lengthy and probably overbearing and overdrawn fashion. I talked about 2810, 2810, 2808. These are really important areas. I also talked about 25 through 29, if you recall. And so if we have a base at 66 and we have a range extension up, meaning we take the initial bounce, the first hour's high, out, if you have a runner on, these are the kinds of trades where you're looking for 6-to-1, 7-to-1 type of return on risk, because the long in the 65 area really had about 3 points, 3 to 4 points of risk, and with cover for about 8 points, so you get your 2-to-1 there. If you hang on to the runner really shouldn't be let go of until 2810, 2808, 2810. And if it does exceed, if you have more and it does exceed 2810, then you're looking at 2529. That is, as I explained yesterday, is the purpose of me drawing those scenarios and those lines. And so here it is, it goes to 2806.50, then it goes to 12, and then it finally rotates back down into the IB high. And at this point, you got to tell yourself, well, the 10 area pretty much held. Remember, these are zones, they're not exact levels. These are zones, not exact levels. And so what you have is a potential for a decent resistance here. We hit the prior day's closing price at 1250 to the tick. You can see the high print is at 1250 here, which is the prior day's close. We have the point of control in that area. So a very decent resistance area. And so we get the kind of reaction we'd expect. First area down is the IB. We want the IB defended. If it's not, then guess what? We're looking for the confluence of mid right here. We're looking for mid. We're looking for VWAP. We're looking for the stock zone that's already there, this gray band, the open, all in this area with confluence. And so here's another opportunity for about a 3.5 point of risk for about 12 points of gain. And it ends up pushing about 17 points higher. So yesterday, despite the rest of the week, yesterday had some really clean structures. And overall, the even the pullbacks. So we put this high in at 28.10, 75. We pull back, but we don't quite pull back enough. But it does retest this nice little consolidation zipper area here. It does test it here for a quick pop of about 12 points, 13 points, something like that, maybe 14 points before it starts to falter and we get into the last hour of the session. My point being, the auction was very orderly yesterday. We had some really nice zipper consolidations, and you can see here a nice zipper, and then we pull back to form another zipper against that prior zipper, and so on and so forth. The overall profile yesterday shows pretty active price discoveries. You can see yesterday did not quite have a value area, right? So it's just this serrated knife or a jigsaw kind of shape, right? And what this is saying is the price discovery is active throughout the entire range. And so with the point of control being at the high, what do we expect here? It's too bad there's a delay in YouTube of about 15 seconds, but I'd love for this to be more interactive and kind of quiz you as we're going along, because at the end of the day, the purpose of this is to enhance your knowledge. Whatever you use. Hopefully, you're profitable with it, and whatever you doesn't strike you as common sense, you can ignore. But in either case, we end up with a point of control at the high of the range, a weak high. So what do we expect? We expect this to continue higher in the extended hours, and it did to 28.63, exceeding the 61 quarter stock zone and making its way to 68. And so what this is it's an incomplete auction on the close in a price discovery environment. And what we're doing today as we come back here is we are very likely to find that that consensus in this area. So what we did is we squeezed down to 2760, the 6560 area, and then we pushed up into 2850, and now we're kind of in between. And so I expect today to spend the day discovering what's in the middle of this thing. So we've gone far enough to find where the high is in an incomplete auction. So I'm very suspicious of that high up there from yesterday at 53.75, 54. I expect that to get taken out at some point, but the market's taking a bit of a break here. Delta was with us yesterday. Look at the Delta. The Delta finished at its high with price at its high. So there's some really good buying going on here, and it's likely to continue higher. And here we are in the middle of yesterday's range. There is no value area yesterday, and we're likely to establish one today. So that is the context. That is the hard part for most people to kind of wrap their heads around, to develop context so you can respond or answer. The first question you need to answer as a trader is, what is my bias? Right? Then there's the second question of where's my entry, which is where 99% it seems of the focus of traders goes into where's my entry? Where's my entry? This is what they focus on. Then so it's bias, entry, stop distance, and target. Those four components make up your trade. You have to get these right. All of these have to be right. Okay, you can't just get one of them right, or three of them right. You have to get four of them right. Right. So the overall context is what dictates bias, and that's where we start. Here's the overnight session in terms of the heat map. Really nice liquidity up here at the high at 2860, and you could see the market kind of tried to blow through it with a nice collision, and it failed. And in classic fashion, it just comes back. It comes back to revisit that high liquidity area before it sells off. This is a scalping setup. This is some nice scalping setups in here, and then we finally explode downwards. So now we push into the liquidity down here, which has been resting for the entire session at 28.30, and then this occurred before. This occurred basically on the news that POTUS is not going to be talking to Xi and maybe cutting ties with China. The market responds as we would expect it to respond for once, and then since then it's just been sideways until we got to right here for retail sales, and we're in this really bright, hot area of liquidity below, just the liquidity stacked. Where is it starting to stack? Does this number ring a bell right here? 2810, 2810. It starts to stack from there all the way through to 2803. This liquidity is expected to stick around. I expect it to trade out. I'm looking for this to consolidate and take a bounce back up early. And as we look back at the structure and the overall liquidity of the market, it's relatively clear to 28.30 and then 28.35. 28.35 expected to provide a little bit of resistance here, and 28.30 with the liquidity, resting liquidity there. Okay, so that's what that looks like. If we take a peek below, if it breaks through the 2800, we really don't have very much. 2795 and 2780 below, and those are fairly new. You can see this liquidity all shows up at the same time, so it's suspect to me. And most of the resting orders, really what people are gunning for, it seems, is 2875 above. That is above the 2850 where we put in approximately where we put in the high yesterday, 53.75. Okay, that's the wrap for today. That's basically the summary of yesterday and how the context is building for today. Now let's take a look at what we're expecting for today. But I want to remind everyone, it is like Friday, right? It's like Friday. Please take a moment and hit the like button if you're on YouTube. If you don't see it, just please switch to YouTube, find it, and hit it. Here's what we're expecting for today. Boom, boom, switching colors. Takes me a bit to set up this screen. So all these lines, oh my God, all this noise. This guy's got noisy charts. That's not noise. Those are stock zones. These are areas that the market is expected to respond at and areas of engagement. Okay. So here we're opening right here. We're opening in range inside of the deep part of the range from yesterday. So we expect the market to have two-way interest. I'm expecting it, given how it's setting up, I'm expecting it to consolidate, and I'm looking for it to break higher. Remember that liquidity below that I just showed you at 2810, at 2810, which just so happens to be the overnight low from yesterday, 2810. So there's a ton of liquidity right in here. There's a ton of liquidity here. And so the expectation is it's going to attempt to push lower, but it's likely to push higher. And as I had indicated, the initial target's 28.30, 35, and then it's likely to squeeze back up into the prior point of control, consolidate here for a little bit before it starts to move towards that prior point of control plus the week high. And I'm looking for it to take out the overnight high and make its way towards the 28.6875 from whence we fell right here. So that's today. I'm expecting it to be a bit of a grind and a rebalance to the sell side on the close. Okay. So the secondary is a complete failure of that hypothesis. It opens up, it pushes into 30, 35, it runs into that liquidity, impulses down back to 10, and then reevaluates this range and consolidates somewhere in between. I'm not expecting too much today. If you're at Convergent, I don't anticipate too many comments in Head Trader channel today. I'm expecting it to be a rest day after a relatively active week. Okay, I'll leave you with that. Good luck today, and I'll catch you on Monday. Remember, it's Friday. Please be conservative, more conservative than usual today. This is the day statistically that most people kind of give away profits. So be calculated in your response and in your participation. And if you haven't done so, please check out edgeclear.com. This is a brokerage that I launched last month with a great group of brokers, and we're here to serve the trading community. You need to clear your trade somewhere, clear it with someone who's familiar and who understands traders. Good luck.